Welcome everybody. I am Alexis McKenzie with JC Penney Realty, and next to me is Telly Cardarelli with Mortgage Equity Partners, and we are here to help you through the home buying process, and more specifically the mortgage process. And what we're talking about today is different type of debt that can affect your credit score and eventually affect the ability to get a mortgage. But we're going to break down a couple of the most common debts that people have, and what they are, what they mean, and why they are not good. So here's Telly.
Great, thanks. So three things that I would definitely mention that would have a possible impact on your credit purchasing of a new home. One obviously is medical collections. Typically on medical collections, they're not paid on time, they get in collection, it can have a negative impact on your credit score. Okay. The next thing obviously would be student loans. Everybody has them. Everybody, depending upon the balance of those student loans, it depends upon the exact amount that we'd have to put against your ratios per month. An example would be if you owed $20,000 on a student loan, you would obviously be at $200 a month. Okay, 1% of the student loan opportunity. So again, it's very important to know that if you've co-signed or you have student loans, to let us know up front so we can make sure we properly put that into your qualifying purposes for the loan. And the last thing, of course, ultimately is credit cards. Maintaining those credit card balances is really important. Typically, we look to have no more than 30% of what the specific creditor would say that you've applied for. An example would be if you have a $5,000 credit limit, you want to be at 30% of $5,000. Anything more than that can start having a negative impact on your credit. But ultimately, these three topics here, when it talks about your student loans, your medical collections, and your credit cards, can all be accommodated by us looking at the what-if simulator in your credit. So if we need to investigate and figure out what we can do to improve your credit score, we can look at the what-if simulator, pay off some debt, get rid of the medical collection, look at that and see what it does to increase your credit score. So if you've been recently turned down because of credit, or you don't know what your credit is or anything like that, please reach out to us, because ultimately at the end of the day, you may not qualify now, but imagine 2 months, 3 months down the road, you're looking at qualifying. Guess what? Typically you'll be looking at buying a house under contract within the next 30 days. So give us an opportunity to look at your credit score. Not every lender is equal when it comes to the qualifying purposes. The difference of that is that we have FHA, we allow the maximum debt to income ratios. So please give us a call. MCC Tax Credit Program can also give you a great opportunity to increase your purchasing ability. So if you've been recently declined, you have questions. If your questions haven't been answered, give us a call. We're here to help.
And let me go back real quick. So 3 of the debts that you talked about were medical, which is always unfortunate. Nobody ever wants to have that, but it definitely needs to get done, right? Everybody needs to be taken care of. Your health is more important than anything. So definitely pay those. They are usually low interest rates. Is that true?
Well, typically on a medical collection, those are deductibles. Unfortunately, a lot of plans that you've noticed now are deductible plans where you have to pay in so much money before your insurance pays out. So for example, and some people, they have $6,000 a year as a family deductible. The insurance company the office will bill the insurance company, and then of course they'll bill you in the mail. And if you don't pay those on time, or you don't set up a payment arrangements, those will become collections. Now, a lot of hospitals and doctor offices, they will not charge you interest. They'll just ask you for a payment arrangement.
Oh, okay, so that's nice.
Yes.
Student loans was the second one you talked about. Like you said, everybody's got them.
Yep.
Everybody also then ends up having them again because they end up having children that they end up wanting to help through school. So student loans are prevalent out there, but like he said, just make sure you're paying them. Don't be delinquent on them. The last one you talked about was credit cards. Again, everybody has them, but you need to make sure you're paying those minimum balances. You don't miss payments. That is probably the worst thing you can do. And then what Telly was talking about when he said the simulator, not stimulator, that would be awkward. The simulator is that he can tell you then through his programs that he has, if you were to pay down your medical bill, this is what your credit score would be. Or if you're to take that extra money every month and pay down the student loans, this is what your credit score would be. Last but not least, if you're to pay down your credit cards, this is what your credit score would be. So he will help you decide where to put any extra cash you might have per month and what to put it towards to help you out in the long run. So that's about the end and short of it. So I hope this was helpful for you. And when you're ready, give us a call. I'll put our email and our websites in the end of this video. Call one of us and we will help you out. All right. Thank you, everybody. Bye-bye.
Thank you.